Good afternoon, ladies and gentlemen. Welcome to the Lakshmi Vilas Bank earnings call. I have with me here my colleagues to assist me, Mr. Sundar, the Chief Financial Officer, Mr. Meenakshi Sundaram, the Head of Corporate Banking, Mr. Narayan, Head of MSME, and Mr. Kumarappan, the Head of Recovery. They will assist me in the call today. The last year has obviously been one that has seen banks been moving around quite a bit, and it's been a roller coaster ride for the entire industry. We started the year on a positive note with a lot of good work being done in the aftermath of demonetization, the RERA overall, and the GST implementation. But industrial production continued to nosedive, and this has affected the primary as well as ancillary industries. Along with stock, the flow in terms of asset book stress increased, and this has affected the regulated credit ecosystem. The upside was, of course, the orientation towards digitalization of the economy, which I am sure will reap benefits in the years to come. I will come to some of the numbers straight away. I imagine that the press release is with you already, and you would have the results. The business mix of the bank stood at rupees 60,314 crores against 54,512 crores last year. The balance sheet size stood at rupees 40,429 crores. The lending book was at 27,005 crores, reflecting growth of 12.70% over the corresponding period in the previous year. Deposits grew 9.02% to rupees 33,309 crores. Out of this, CASA grew 20.14% to rupees 7,015 crores, which is a growth of 21.06%. I must also, this is a year-end number. On a daily average basis, the CASA for the year was at 19.39%. It may be noted that the daily average number for the corresponding quarter of the previous year was 17.50%. The total revenue for the quarter came in at rupees 740.90 crores against rupees 864.99 crores in the previous year. This is a drop, obviously, of 14.3%. Some of you would recollect that earlier last year, I had specifically indicated that we had two major areas of focus. One was the credit watch list, and the other was the CASA balances. Thanks in very large measure to the events over the last 1 year, a very large part of the watch list has now slipped. I had indicated to you at the beginning of the year that our watch list was at rupees 2,500 crores. As I had said, these were restructured accounts as well as S4As, SDRs, and so on, 525s and so on. I must tell you that out of that watch list, about 2,100 crores have now slipped during the year. If at all I were to look at that watch list today, it consists of about 19 accounts adding up to about 400 crore rupees. None of these accounts are of rupees 100 crores or more. I think I have now reached a stage when I can confirm to you that for the bank, the worst is now behind us. Incremental stress is likely to be very small. The operating profit fell very sharply, resulting in an operating loss of rupees 69.25 crore for the quarter. Net interest income for the quarter came in at rupees 120.47 crores against 227.81 crores in the previous year. Our net interest margin for the year was 2.38. Is that correct? For the year?
2.38, correct.
2.38%. Other income dropped to rupees 38.28 crores against rupees 131.43 crores in the corresponding quarter of the previous year. This is mainly on account of loss from the investment portfolio. Operating expenses for the quarter grew 26% to rupees 228 crores. I'll now give you some numbers on provisions. Provisions other than tax for the quarter were rupees 921.41 crores. This is a sharp rise from the number of 108 crores in the corresponding period of the previous year. Obviously, the combined impacts of the fall in income and the additional provisions have severely impacted the bottom line. We are reporting a net loss of rupees 622.25 crores for the quarter, as against a profit of rupees 52.16 crores in the previous year. The gross NPA is 9.98%. Sequentially, it's up from 5.66% in December. Net NPA is at 5.66%, up again from 4.27% in December. However, the provision coverage ratio, which is at 55.07% and down from 59.51% last year, but improved from 46.75% in December last year. The slippages are mainly on account of shifting of some of the restructured accounts to substandard status, as well as normal slippages that have happened in the course of the year. Out of the slippages, NCLT cases come to around rupees 584 crores. There is one account in the gems and jewelry sector of about rupees 30 crores, which was declared as a fraud. As a consequence of the drop in income, the cost-to-income ratio for the quarter was 143.62%, and for the year came to 68%. We ended the year with a CET1 common equity tier 1 at 8.05% within the overall capital adequacy of 9.81%. Some statistics, of course, the routine. The number of branches are now 548, and we have 1,020 ATMs across 19 states and union territories. Before I end, I must mention here that the year has obviously seen terrible toll being taken on the lending book. But the comforting factor now is that the bulk of the stress is now behind us. We do also expect to see during the current year significant recoveries from the slippages that we have seen in the immediately preceding years. And we have necessary comfort that a fair part of the slippages will in fact be recovered. Recoveries are obviously likely to be from various sources, some through direct recovery from the borrowers, some through sale to ARCs, and some through NCLT resolutions that will happen. My sense is, as I said earlier, that the worst now is behind us. The bank is focused on raising fresh capital. We are engaged with some investors, and at some point of time when we are close to a solution, we will of course be making the appropriate announcements. It is my sense that this year significant amount of capital would be raised, and that should serve us for the next couple of years as we focus on our business plan for the next 3 years. I will stop here, and I would be glad to answer any questions that you might have.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Ravikant Bhatt from MK Global. Please go ahead.
Sir, good evening.
Good evening.
So could you share how much of interest you might have reversed during the quarter? I think that is
56 plus 39. 56 and 9. 96 crores, would it be?
It is 59 plus 36. That is about 96 crores.
96 crores odd.
96 crores. Okay. And I missed your comment on the watch list. So
yeah.
Did you say, most of what you had identified has slipped, or is there anything left to slip?
I would say about, my watch list is now down to about 400 crores.
Oh, you still have 400 crores. And if I recollect correctly, you had said that, you would expect all of it to slip entirely. Does that still hold?
I can't say that at all times, because times might change and some of these might actually escape, so get upgraded in due course. So I wouldn't deliver judgments that way, but one always has to keep a very close watch on these. So they continue to be in the watch list.
Right. And you expressed optimism on the recoveries during FY19. So
Yeah.
if you could just throw some more color, where is this hope emerging coming from?
Like this.
Same accounts which slipped during FY18, you said?
Many of these would be accounts that would have slipped in FY18 or some that might have slipped earlier.
Right.
Some of these also are ones where I have significantly provided for.
Right.
And there seems to be a lot of interest now amongst ARCs and others to buy assets.
Okay.
And I must say that I've had significant success in selling a lot of assets purely in cash during the previous year. So I do hold out a lot of hope there. And my sense is that this could be a great year for us as far as asset sales are concerned. I do expect to significantly reduce my stock of NPLs.
Okay. And so one last question on the fees. If you could just talk net of trading profits, I think there were a lot of low-hanging fruits that you are hopeful of converting into fee opportunities. Where you had talked about relationships where you had lending relationships but not much of fee relationships. So
that's correct.
What kind of progress you have made on that, and how do you see this particular line item in FY19 to evolve?
I must tell you that fees, other than treasury, were relatively flat during the year. But that is primarily on account of the fact that my credit book as such did not grow much. You'll appreciate that for large parts of the financial year, I was hobbled as far as capital was concerned. And the capital that I raised in the rights issuance was effectively booked only in the first week of January this year. So for at least 3 quarters, I had no opportunity to really aggressively grow the book. We began growing the book in January, and to that extent, we were at least not able to book as much of business as we could have. But nevertheless, what is comforting is that the scope has changed, and today a lot more of LCs and guarantees are being seen. These proposals we never used to see earlier. Similarly, of course, I find that there is a lot more traction as far as sale of third-party products is concerned, where I think we grew about 40% last year.
Sure, that's helpful. All the best, sir.
Thank you.
Thank you, sir. Anyone who wishes to ask a question may press star 1 now. Participants, to ask a question, please press star followed by 1 on your touchtone phone. Now, we have a next question from the line of Jitendra Upadhyay from Bonanza Portfolio. Please go ahead.
Hello, sir.
Yes, please.
Could you tell me how much of your slippages slip outside of your watch list?
Slippages from outside, out of the total slippages, I would have said about 200 crores would have slipped from outside the watch list. These were all tiny accounts that would have added up. They would have been a large number of accounts, but these would add up to about 200 crores.
200 crores. And what kind of gross NPA you are looking for next year, by the end of next year?
FY19 end, I would have done a very bad job if I were not to bring it down by at least 200 basis points.
200 basis points. So you are looking for a gross NPA of around 7%, right?
That's correct. 7 to 7.5 at the most. Should not be worse than that.
And what kind of capital raising plan? Is there any amount you can share with me?
I wouldn't like to put a number, but let me put it to you this way, that it will be very significant. The amount would be very significant, is my sense, in terms of the engagements that I have had with investment bankers and with prospective investors. My sense is it would have to be a very significant capital raise. You can yourself estimate, considering the sort of slippages that I've had, the sort of growth capital I would require.
Okay. So
I hope in the near future we would be able to make some announcements. But at this present moment, I'm unable to specify anything.
in last few quarters, you are telling about a retail portfolio. You want to increase your retail portfolio. What
Yes,
kind of
please.
steps you have taken in last 1 year to increase the same?
Let me mention some of the steps that we've taken to grow the retail business. In the first place, we have set up now separate teams that are handling the retail business. We have set up direct sales teams for acquiring business. Our sense is, as the business stabilizes, about a third of the new acquisition will come through branches, about a third will come through the direct sales teams, and about a third would come through references and dealers and so on. And this is beginning to happen already. And we have set up retail asset centers in Bangalore and Chennai, and we hope to set up 3 more very soon during this year. And a separate retail asset management center will be created soon to handle the back end of operations for us, so that the branches will be largely left to act as sourcing centers for us.
Okay. Is there any branch addition plans you have in mind?
I intend to consolidate the business this year and not really focusing too much on adding branches, but what we will in fact be doing is remodeling a large number of our branches to take advantage of the digital revolution that is going through banking. A whole lot of branches will in fact be converted to what will be effectively digital branches for us. And the focus would be to increase the digital footprint of the bank. I must confess that today, 2/3 of the business is still non-digital routes for us. Only about a third of the transactions are through the digital route. The intention is to significantly improve upon that. So we'll be putting in a lot more of cash dispensers and cash deposit machines, the recyclers effectively in the branches. The effort will be to move a lot more of the business away from the cash counters to the automated options. And then that will also result in us not requiring large branch premises going forward.
Could you provide me what kind of credit growth you are looking for FY19?
For FY19, my sense is our growth will be in the region of 20%.
20%, mostly
yes.
from retail?
I beg your pardon?
Mostly from retail or corporate?
No, frankly, I can't ignore the corporate bank yet. So my sense is the corporate bank will continue to deliver the bulk of my growth so far.
So going forward, corporate will lead the growth, right?
Corporate will continue to be the leader for the present. What we are doing, of course, is limiting the size of tickets. Individual loan tickets will be made smaller and more manageable for us. But nevertheless, the corporate bank will continue to be the mainstay, though there will be obviously a lot more increased focus on SME and retail.
Okay. You were planning to launch a credit card business, credit cards. So what kind of steps you have taken for the same?
The credit card will have to wait for a while. As you can understand, those are personal loans. And our sense is, as far as retail is concerned, our effort will be to gradually go up the risk curve. So we've started largely with home loans and LAP transactions. Gradually we'll go up into two-wheeler, four-wheeler financing also. Then get into consumer durables and then effectively into unsecured personal loans. And that is roughly when you'll see our credit card also coming. I can't see that happening in the next 3 years.
Okay, so in next 3 years you will not see a credit card, right?
Unlikely that I'll have my own credit card. I could have relationships with others, but it is unlikely that it will be my own card.
So what kind of CASA target you are looking for next year?
My CASA should hopefully reach 23% next year end.
Okay, and NIM? NIM will be stable at this level?
This year my NIMs have been affected on 2 counts really. Partly on account of the fact that the credit book was hobbled with the NPLs, since I'm going to aggressively work on NPL recovery, that will reduce the stress on the interest income to some extent. And moreover, we are trying to at least build assets right from the beginning. I would be happy if I were to report NIMs in the region of 2.5 to 275.
Okay. Okay, thank you. That's it from my side.
Thank you, sir. We have a next question from the line of Amit Singh from Batliwala and Karani Securities. Please go ahead.
Thank you, sir. Thank you for taking my question. Actually, I joined a bit late, so can you give me the number of slippages, recovery, write-offs, upgradation, as well as for the margin for this quarter? Hello?
Yes. You're asking for a number of things. I'll give you one by one. Let's get into slippages. That's the flavor of the season in any case. So we will handle that first. This quarter, I had total slippages of 1,600 crores, 1608 actually.
Okay.
And there was a recovery of 341 crores. And out of the 341 crores, actually 215 odd crores were cash recoveries.
Okay.
I'm sorry, I missed your other questions. What else did you want to know?
Write-offs and upgradations.
I have about 51.66 crores of upgradation, and there was just one write-off of 6.40 crores.
Okay, sir. Thank you, sir. And, sir, what was the NIM for this quarter?
I beg your pardon, the NIM.
Yeah.
The quarter's NIM was... It was 1.34, I think, for the quarter.
Okay, sir. Thank you, sir. Thank you, sir. Thank you.
Thank you, sir. Participants, to ask a question, please press star 1 now. We have a next question from the line of Alok Shah from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. Sir, a couple of bookkeeping questions. Could you please help me with our RWA number?
Risk-weighted assets, just a moment, please, Alok. It is 23,923, please. 23,923 crores, Alok.
Sure, and maybe the Tier 1 capital, if you could help me with that number.
My Tier 1 is 1926.
1926. Okay. Now, sir, we kind of talked about 1680 odd crores of slippages for this quarter, and for full year, we were at close to 2979 crores of slippages. Now, if I try and break this down, 2979 minus 2100, which is portfolio of 2500 crores of watch list, 2100 crores slipping into NPA, we are talking of a normalized slippage of 200 odd crores. Is that right?
That is correct.
So that's actually a good number to look at. And with that number as in your mindset, what would be the slippage run rate that we now envisage for FY19? I mean,
it's like this, Alok. First of all, my watch list is now down to about 400 crores.
Right.
This constitutes some 19 accounts.
Sure.
And for obvious reasons, you will realize that none of them are over 100 crores.
Sure.
So, now, as far as the watch list is concerned, I have given up predicting when they will fall. They will fall when they will fall. Yeah. Now, leaving that aside, from the SME and retail books, slippages could always happen.
Sure.
So, what I will say is, my sense is that it is not unlikely that this year, total slippages could be, unlike the previous year, could be a more manageable number of, say, 350 to 400 crores.
Sure. Sorry, 350 to 400 crores analyzed, does that still match up? Because, well, the good part here is that of the total slippage of 3,000 odd crores for the year.
I'm expecting that the watch list, not everything from the watch list will fall.
No, sure. Okay. And you talked about a very strong recovery this quarter of 341 crores, of which 215 is cash recoveries.
Yeah.
What is the nature of that, sir? Because this is a good amount when I understand slippage is there, but 215 crores of cash recovery in itself is a big number. Was it more of granular accounts, or how was it? Some sense there, please.
Well, actually, it's a mix of both. So there's one biggish number, which is, of course, one famous steel account that the entire market is talking about.
Okay.
So leaving that aside,
sure.
The other numbers are some small numbers adding up.
Right. Okay. And then you said, again on this NPA part, NCLT is 584 crores of cases. What's the total, the number of cases, and what's the provision held against this account?
NCLT is 458, and the balance is that was changed 12th February RBI circuit. Total 580.
Out of that 584,
yeah.
Actually I stand corrected. 458 actually is pure NCLT.
Okay.
Some of those others are the 12th February casualties.
What is that amount, please?
So that would come to about 126 crores.
Totally 584.
126 crores are there. And you asked me about provisions.
Right.
Well, I'm quite happy to say that at least I should be 50% or more provided on this.
50%.
On the NCLT cases?
Yeah.
Sure, this is 1 and 2 both, right, sir?
That's correct.
Maybe, okay. So just one thing, sir, we've always talked about watch list, which also includes SMA2. Is that understanding right?
That is correct.
So that's where, because I'm just trying to look at 1680 crores of slippages for this quarter, and then you'll have 126 crores only, which is not even 15% from RBI circular. Assuming 458 crores is the NCLT cases. So we've kind of also recognized a substantial part of SMA2 portfolio into NPA this quarter?
Well, yes, a lot of it has happened.
So, could you put some number there, sir, please? Because I know it's a moving stock.
Yes, my challenge is that it's difficult for me to put it that way. Sure. And it's, quite frankly, it's a very large number, Alok. It's not as if it's just 1 or 2 accounts that have slipped.
No,
very large number have fallen, actually. In the process.
Sure.
And it's all sorts. These not necessarily all have fallen. This is separate to the ones that have fallen. That's there in the presentation, I think. It's in the presentation.
Sure. And maybe the last question, how is the stock of restructured portfolio now?
Restructured only 100. Only 100.
Alok, it's only 100 crores.
Oh, that's great. Okay.
Actually, Alok, 76 crores is all I have.
76, okay. That's a big drop. Okay. Sure. And so just one thing, you talked about that slippage of 400 odd crores for next year. Is there some sense on how the recovery will pan out?
Oh, I would be very disappointed if I were to recover less than, let's say, 1,300 crores next year.
Okay. Sure. And yeah, that's it from my end, sir. I'll join the queue if there's anything else. Thank you so much.
Right.
Thank you, sir. To ask a question, participants may press *1 now. We have a next question from the line of Kaustav Kakati from DHFL from America. Please go ahead.
Thank you for taking my question, sir. So, you had mentioned in your opening remarks that the other income figure of 38 crores obviously contained a significant loss from investments, which I'm assuming is from the fixed income book. Would you be able to quantify that amount, sir?
The loss on the fixed income book? Yeah, we can.
Total loss of the year, total loss, net trading and...
the trading losses came to about 135 crores for the year.
Okay. That's for the year. What would be the corresponding figure for the quarter, sir?
Hang on a sec. Let me just do some calculating for you. Hang on. So 138 is only Q4.
No, if you add all for the year, minus 135 net P&L contribution.
I see.
Only for the quarter, net P&L contribution is 365 negative. And the loss is 34.
Look, I'll correct that. For the Q4, the trading loss is 34 crores.
34.
Yes.
Okay.
And for the year, the number is 64 crores profit.
Okay. That's the net figure.
Depreciation is separate.
Yeah. So, I had another question. Basically, last time around, you had sort of hinted that there was expected recovery of a fraud account. So, can we assume that that has also been a part of the 300 odd crores that you've recovered?
No, I'm afraid not. I haven't been successful there.
Okay. So, that is still pending.
That's correct.
And the recovery for the next year, when you're talking about 12 to 1300 crores, so we'd be assuming that you'd be accounting for this particular account also.
Well, obviously we build in all the numbers, and that particular account was about 80 crores.
Right.
It's all in the pot, as you can understand.
Right, sir. Sure, thanks. I'll join the queue if I have further questions. Thank you.
Thank you, sir. Anyone who wishes to ask a question may press star 1 now. We have next question from the line of Amit Singh from Batliwala and Karani Securities. Please go ahead.
Hello, sir. Thanks for taking my question again. Just wanted to know from which sectors the slippages have come? And major sectors.
I'll tell you. It's about, primarily infra and metals. Infra and metals are the main ones. So out of the total, in the percentage terms, if I were to give it to you, infra would be about 29%. Metals would be about 26%. And so that between them, they are about 55% or so.
Okay. Thanks.
Infra was 26% and metals were 22%. Mining was 5% and textile was 5%.
Thank you, sir. Thank you so much. Thank you.
Sir, do you have any further questions?
That's it from me.
Thank you, sir. Participants, to ask a question, please press star 1 now. Thank you very much. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Mukherjee for closing comments. Over to you, sir.
Thank you once again. So, it's been obviously a very difficult quarter, but the silver lining that I highlighted right at the beginning was the fact that now we can claim with some degree of confidence that the books are now relatively very clean. So my business teams are now at least less hobbled as they go out into the markets to scour for new business. And we do hope to equip them with appropriate levels of capitalization very soon. So we are in the process of putting together our plans, and my sense is sooner rather than later we will be adequately capitalized to serve our requirements for the next 2 to 3 years.
Thank you very much, sir. Sir, shall we conclude?
Yes, please.
Thank you very much, sir. Ladies and gentlemen, on behalf of Lakshmi Vilas Bank Limited, that concludes this conference call.